Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Hump Day here. It is Hump Day, Wednesday, January 31st, end of the first month of the year. Hey, we got a lot of data to go over, so we're going to jump right into it. So we'll start off with the ADP employment numbers from the month of January. So last month it was revised a little bit lower from 250 to 242,000 new jobs were created in the month of December. Great numbers. And then for the month of January, it was 234,000. So great start here. We've had three great months, averaging over 200,000 jobs. So even though it dropped a little bit, it's still very good numbers here considering. Now this is on the heels of what's going to be the Bureau of Labor Statistics, or BLS's labor non-farm payrolls coming this Friday. So that would be the big number. It has a little bit more weight to it. Tomorrow we'll have the jobless claims, but so far looking good so far this week here. Employment cost index for the fourth quarter, we see previous reporting at 0.7%, supposed to be forecast at 0.6%, and it went up 0.6%. So again, employment costs went up. So again, that's going to be some caution out there for inflation. Are we going to see more inflation? But with that, we're also seeing people getting paid more. Wages seem to be increasing a little bit as we saw after the tax reform. It's a little early, but we might be early for that to show up really on the employment cost index for the fourth quarter. We may see that continue to rise as we go forward here, as we're reading every day. It seems like more companies say they're giving out bonuses or giving out increase their salaries and stuff like that. So those are all costs of employment rising. We also got Chicago PMI, which is the manufacturing in the Chicago region. So we had a 67.6 on the index in December, and January it dropped down to 65.7. Now anything above 50 is considered improving, so this is still considered a very good number, even though it dipped a little bit. On the other hand, we had, of course, Philadelphia and New York. Instead of going down, it went upward. So we kind of had, but in the Chicago region, it dipped a little bit. Again, a strong number still. We got pending home sales for the month of December. So these are month-over-month numbers here. So back in November, we had a 3% increase. Forecast for December is 0.4, and it came in at 0.5%. So 0.5% it went up month over month from November to December. So great numbers again. This shows how strong the housing market is. There's stuff out there talking about affordability, but again, that affordability is going to only rise here sooner, become more affordable with people making more money, which is, but again, the biggest problem is the lack of inventory. We're at, since they've been recording this, these are at the lows at about approximately 3.2 months worth of supplies, which is a historic, again, this is at a historic low since they've been recording this back in the 90s, and this on a national level. Now, on a typical market, we would have 6 months of supply. So it just kind of tells you where the market is. Then later today, this morning, right around 11:15 Pacific Standard Time, we'll have the FOMC wraps up their meeting, and we'll be giving their announcement and press conference. This will be Chairwoman Janet Yellen's last press conference, as she will be stepping down, and then the new Fed Chairman Jerome Powell will be taking over in February, and then he will be giving his first press conference come March. Now, this FOMC meeting, they are not expecting any rate hikes, but they are expecting that probably in the March meeting. Before we were hearing about approximately 3 rate hikes this year, but if inflation comes in and things, keep looking on the up and up, it looks like they could raise it possibly more, maybe as much as 4. But things that they'll be looking for, they're going to be looking to see if there's any comments about the tightening of the quantitative tightening, basically. As we mentioned, they're doing the great unwind. If there's any comments about that, they're going to be talking to see if the Fed makes any comments about inflation or the tax, maybe about the tax reform that we just went. See if there's any comments about that, the progress of the economy. Those are different things they're going to be seeing if there's any changes in those statements or any comments. So look for possible volatility if anything out of the norm comes out there, especially in inflation. That's been pretty touchy of late with the weaker dollar. Inflation's been kind of really, that's part of the reason why we're seeing a lot of this up and down seesaw effect in the markets over the past week and a half here. So especially if there's anything about strong inflation, that could spook the markets as well. So let's jump over here to the headline news. The stock market is up. So as I'm doing this, the stock market, Dow is up about 120-ish. It was up much higher, even up to around 250, I believe, this morning, and then seems to pull back now. We had some strong Q4 earnings, like most namely Boeing came in, which makes up a pretty big weight in the weight index or in the Dow components, about 9%. That's wrong, but there's the healthcare is kind of bringing things down a little bit, primarily because if you recall yesterday, we had comments that were mentioned, or not comments, but talk about Chase, Amazon, and Hathaway, Berkshire Hathaway teaming together, partnering together, and creating some type of a healthcare provider. Basically, will be competing with them and to lower the cost for their employees and to give better service. And since that was mentioned, the healthcare has been taking a little bit of a beating the last 2 days. And then, of course, we had the State of the Union address, the SOTU. Yesterday, it came in very inspiring. The investors are liking, or at least the tone of it. They really were impressed with the tone. It seems to be showing in the stock market. And then even President Trump had made some comments about trying to lower prices in the healthcare industry. So that's getting a little out of hand. So as a result, the healthcare industry is taking a little bit of a beating as we are approaching this week. Let's take a look here at the bond market. We were up about 5 basis points this morning, starting the day off, and then since we have pulled back, as you see, even we're a little bit further down, but currently we're down about 6 basis points from where we left off yesterday, which was just above this first floor of support. We're trying to get a foothold and stay above that floor of support, but it seems to be knocking on that door. As a result, we're kind of seeing some negative pricing here. A lot of the lenders are going to come in a little bit more conservative, and especially when we start the day up here, and it'll be down here. That's over 12 basis points, and that's going to translate a pricing for the worst so far this morning, especially on the East Coast lenders here. So let's take a look here at the, oops, sorry about that, Treasury here. As we can see, we're up about 1 basis point here, about 2.71 range. Again, this is another reason why it's what's holding the stock market from taking off too much, because at this level of yields, they're looking at this and maybe getting out of a riskier bet on the stocks, especially at the price levels that they're at, and liking the yields that they're seeing on the 10-year Treasury, and that's keeping with the stock market as well for dollars. So this is coming in. Now, since we passed this floor of support, well, it used to be our resistance, now it's become a floor of support. This is gonna this gives us a little bit more on the upside of potentially rising a little bit more, which could push rates even further up, which will push the mortgage-backed securities lower, which raises interest rates. But this can also keep the stock market in check here, so that's kind of a double-edged sword right there. Just be very cautious here on this. It's not going to be a friend to that of the stock market nor mortgage-backed securities here. All right, so rates are a little bit higher today. Again, prepared for some possible volatility this afternoon with the Fed statement once it's released, and press conference. And otherwise, I hope the rest of your day goes well. If you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork on Twitter, and enjoy the rest of your day. We'll look forward to see you guys tomorrow. Thanks for watching. I hope, again, sorry for the long video this morning, but hopefully you were able to enjoy the extra information here. Bye-bye.